My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be with my friends. I'm just trying to make you a little money. My job, not just to entertain, but to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. I defy you to find many stocks that deserve to be down as much as the averages are, especially after today, where the Dow plunged 650 points. S&P plummeted 2.14%. NASDAQ nosedived 2.55%. There are hardly any reasons that individual stocks should be down as much as those average. In reality, most companies you see are doing much better than the market. But we're in what I call a hostage situation here. We're hostage to a mindset, the notion that the Federal Reserve's on track to obliterate this economy in order to tame inflation, and there's nothing that can stop them. We're so paralyzed by this mindset that good news means nothing, including any of the amazing earnings reports we keep getting, like the ones we got last week. It is going to see how well corporate America is doing versus the weakness that's reflected in the market, including the two companies we're going to talk about tonight. Long term, I think corporate earnings are what will matter for stocks. But right now, what are we doing? Oh, we're just waiting for the Fed's Jackson Hole conference later this week, which is all that Wall Street cares about. That's what crushed everything today, despite how terrific the quarterly numbers continue to be. Well, that and the hangover from last week's meme stock mania. More on that later. Why don't we do this? Let's go back in time. Kind of like the old Rocky and Bullwinkle show, to date myself. Let's look at the actual numbers we got. So on Friday, we heard from John Deere, okay? And it was amazing. I couldn't believe how strong that quarter was. Not only were Deere's orders voluminous and the visibility extraordinary, but they also saw an end to the supply problems which have bedeviled them and left unfinished tractors stored while they waited for new parts to come in. Do you know how expensive that is? The company spent mightily on research and development to make their machines more efficient. Also, farmers don't need as many people to grow their crops. That's very important right now, given that we've got a serious labor shortage really around the globe. Deere's results were met with a host of price target increases, one after another, including two this weekend, because the quarter was that fantastic. But no, don't look at that. Don't look at that. It doesn't fit the thesis of a market in decline. Last Thursday, we got Applied Materials. That's simply called AMAT. It told a story of robust semiconductor market, terrific long-term visibility. Yeah, well into 23. The results were spectacular, amazingly positive for the semiconductors. You know, the semiconductors, that's what was crushed today. We also spoke to Chuck Robbins, the CEO of Cisco, a huge tell for tech, and I haven't seen him this pumped in ages, and I know him from 7 years ago when he took the job over. Cisco's a huge tech company, touches every aspect, semis, machine learning, security, and, of course, networking, the bread and butter. It meant nothing that they reported a great quarter. Lowe's and Target reported Wednesday. Both put up excellent numbers. I mean, really excellent numbers. We were all concerned that the do-it-yourselfers wouldn't be spending at Lowe's. That was the whisper. Wasn't the case. Spent like mad. Target cleaned up its excess inventory not that long ago, and what was left sold well. By the way, they're now going up against Bed Bath & Beyond with many of their stores. Not much of a fight, given that Bed Bath's struggling to even pay its suppliers. They are dumping their in-house labels and trying to get big-time brands back at Bed Bath. They are competing with Target for that same merchandise. Good luck. I loved the quarters that we got from Walmart and Home Depot on Tuesday. They were both incredible. Raised numbers, price targets both. Consumers welcome Walmart's everyday low price model. The stock soared. Home Depot just crushed it with professional investors. Now they're giving it all back. Now, see, I mention all this because in light of last week's earnings, I found today's action positively surreal. It's like there was some sort of gravitational pull that made no sense when it came to earnings, but succeeded in turning our market into a charnel house. Even if you think the Fed's going to hint that another 75 basis point rate hike is on the way when Jay Powell speaks on Friday, this sell-off still wouldn't make much sense. It's just not in keeping with how the underlying companies are really doing. But Friday is as good as any place to start this week's game plan, because it seems to be determining everything, or we wouldn't have been down today. Yeah, I'm not starting here. I'm starting here. After all, there was nothing new today other than big layoffs at Ford, and that was because they have to have white-collar people devoted much more toward electric vehicles than the so-called ICE vehicles. That was a decision by Jim Farley to save a lot of money. We also had another decline in crude. That's good, right? That race, it was a race by the end of the day, but still, these are positives because they mean the Fed's winning its war against inflation. But no one cares until they hear it from this man's mouth. Problem is, Wall Street's starting to have less confidence than it did that the Fed will soon pivot to a more dovish posture. I think Jay Powell can afford to be a little less ruthless with the rate hikes here, but the market clearly disagrees. We'll find out who's right on Friday. We need to slog through the whole week, though, to get to the Fed's guillotine. But even if the guillotine blade falls, we can ride through the turbulence and do some buying on the way down after this incredibly difficult two-day sell-off. Why? Because I expect this week's game plan will go pretty much like last week's highlights I just went over. Now, it doesn't mean the stocks are going to bottom. We know that from what I said. It means we got to remember what companies did well so we can buy their stocks at the bottom. For example, tomorrow we hear from Macy's, Dick's Sporting Goods, Toll Brothers, all good companies. I bet Macy's has a decent story to tell about the right clothes at the right time, contiguous with good capital allocation. Dick's is selling all the best sporting goods at good prices, and Toll Brothers is only making homes that it can reap huge profits on. All three should have gotten much better on that supply chain front, too, versus when they spoke last. I like this group. Oh, at the same time, I think Intuit will deliver a terrific quarter with good growth in tax returns and also all the things they do for small business. Wednesday's a little more problematic. Two of our charitable trust names report, NVIDIA and Salesforce. Now, NVIDIA, it's a very high-end semiconductor company. They pre-announced a miss not that long ago versus an already lowered forecast. The same thing could happen again. Rough time for these kinds of chips. I think Salesforce will complain about the strong dollar again, but don't forget that it does a ton of business at Dreamforce, and that conference is back in person this September at the same time as the NFL starts. So I will miss the first home game for the first time in 40 years. There are lots of it's Eagles. There are lots of other software companies reporting that people are worried about, like Snowflake, Splunk, and Box. I think they're doing fine, but it just might not matter because of this general malaise. It's a malaise. It just came to me. It's a malaise. Spelled with A-I-S-E like French. Thursday, we hear from the beloved dollar stores. I got a bat mitzvah. I got two bat mitzvah cards for $1 there. Before I went to my friend Adam Schefter's daughter's bat mitzvah, I always remember that. 2 cards for $1. I only need 1. That's some business. Dollar Tree and Dollar General are good. They should please the market to no end because investors have decided that we're headed into a recession. And the hedge fund playbook says you have to own one or both of these two stocks, of these two companies, even if you've never shopped there. I do. I have a great one in Hampton Bays. I don't like mindlessly following the playbook, but it's not wrong here. My preferred one, by the way, is Dollar General, if they have the merchandise. I'm also intrigued by Ulta Beauty. Both Estee Lauder and Target, which is embedded Ulta's, raved about how well the chain's doing. I think now we're in a mask-off world, which is great for skincare, you know? Ulta will shine. Oh, and congratulations to Mary Dillon, formerly of Ulta, who landed the CEO job at Foot Locker. That one could be a tough mission, but I know she's up for it. Thursday, okay, a little troublesome. Gap could have still one more difficult quarter. Gap's a little bit like, I don't want to see. You know what I mean? I'm not sure how good a firm will be given how the market has turned against buy now, pay later. I do think CEO Max Levchin will try to spin a good yarn, but it's awfully hard tape to pull that off in. Then there's Dell. I bet it's going to report a solid number that will actually help tech, something we very well need by the time we get to that day. Workday reports Thursday night. Many analysts are saying that the sales cycles there have become too elongated. That's analyst code word for it. They're having trouble closing deals. I'm not betting that way, though. I think Workday had a good quarter, and maybe because it's like they leave a Jackson Hole, it may be as irrelevant as today's sell-off. But if we go down every day as we go into Jackson Hole, this is the kind of period that Larry Williams has said is the cyclical low. If we go down every day till then, believe me, on this day, we're doing some buying. Now, when are we going to do the buying? Well, Friday rolls around. We get 10 a.m. At 10 a.m., this man speaks. And then we find out why we sold Microsoft and NVIDIA. We find out why we sold Salesforce and Apple and Netflix when Jay Powell speaks. He's all that seems to matter. Okay, the bottom line, until Jackson Hole, we have to play a guessing game about why these stocks are going down. And for the moment, the answer is basically no reason at all. Jerry in Florida. Jerry!
Hey, going to give you a big booyah shout out from South Beach, Miami. How are you today, Jim?
Well, South Beach, Miami tends to be a nicer area than where I am at any given time. I'm glad you're calling. What's up?
Yeah, been down here since 1975. Yeah, I wanted to just tell you I'm basking in the joy of Palo Alto. They had just a fantastic quarter. I'm sure you know that already.
Oh, better than fantastic. Better than fantastic. I mean, you know, Nikesh Arora is, I call him the delivery man.
That's one of your favorite stocks, and I wanted to get your take on one of your other favorite stocks. You actually named your dog after it, NVIDIA, and I'm thinking about maybe picking up some shares.
NVIDIA, that dog did pass away, so let's be a little circumspect. NVIDIA, that's right. NVIDIA pre-announced a not good quarter. Their previous time they did that, the next quarter was similarly on the conference call. They said negative things. If you want to buy NVIDIA, please wait till after the conference call. Do we have time for one more question? Oh, that is it. Holy cow. I thought I did my absolute best. And it's actually been 30 years. It's not 40 years for the Eagles, but it sure feels like it. All right, anyway, try to find companies that deserve to be down as much as the average are. I dare you. You won't be able to find many at all. Right now, we are hostage to this market's mindset, and all it cares about is a particularly beautiful area that somebody once told me to buy land in, and I did. It's called Jackson Hole. On Mad Money tonight, CNH has its sights set on sustainability. So how is the agricultural machinery company positioning itself for the future? I'm finding out from the CEO, an old hand. Then meme stocks are back in the headlines. So what should you do when you see that and you're in the crosshairs of Wall Street's bets? Even though they love me, sometimes I do get wistful. I'll give you my take. And Palo Alto Networks reported this after the bell, and I'm digging into the numbers, and it looks real good. So stay with Cramer!
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.